So I decided to short the Jumia stock a few months ago, and it was being labeled as the hottest stock out there, being labeled as the next Amazon. And you know what I decided to do? I decided to do the opposite of buying the stock. I decided to short the stock. Now, I shorted the stock for a few reasons, and I'm gonna talk a little bit that more in this video. But the IPO price basically opened at 16 and skyrocketed all the way up to like $45 a share. I believe it did open somewhere around there 16, and that was like crazy. We're like, oh my gosh, this stock is crazy good. I went in at $45 or $44 a share. I shorted the stock, and it started going back up still. Now, this kind of got me a little bit fun. I was like, oh my gosh, are people seriously thinking this is the next Amazon? Are people still seriously thinking that this stock is the best time to buy it? I was like, no. So I kept holding my sell or my short on that stock, and it dropped all the way down to $7.90 recently, which is about an 80% drop or over 80% drop on the stock. And of course, I was able to make some money on the company's short happening at that period of the stock going down. Now, there's a couple reasons why I decided to short this stock for Jumia, and I'm gonna break it down in this video. Now, before I break it down in this video, I want to tell you guys something. This is my personal opinion, and I'm not trying to basically put anything against Jumia or anything like that. This is my personal opinion, okay? So number one big thing that gave me a huge indicator that the stock is not going to be able to perform as Amazon is because it was being labeled as the African hottest, the first African unicorn to go to the stock market, right? To a certain level, yes, but to the most level, it's German owned. It's French owned. It's not actually operated or owned majority shares by African entrepreneurs. So how can it really be African? It wasn't really anyone who was from Africa who was able to take this company to the public market. So that's the first part that I was like, wait a minute, let's look at it a little bit more in detail. Because when I look at how Jumia was expanding, is they treated it like they were Amazon. They treated it like Africa is Amazon. And that was the first part that I was able to see. Them being German owned or French owned was going to be a liability for them on the long term on how they were going to move different things or assets within the African market. They grew too quickly and they did not perfect their system within the Nigerian market. Because a lot of people were facing a lot of different challenges when it comes to Jumia. Like when I speak to people back in Kenya and I ask them like, hey, have you used Jumia? A lot of people talk about how they've been scammed on Jumia. Like I have one of my relatives who ordered a phone and she ended up getting a way older version of that phone, and she tried to get a refund and she couldn't get a refund for months, and she basically says she's never going to shop on Jumia again. And a lot of people have talked about shipping delays or where they can't get a refund or they get the wrong product and a lot of different things that are happening in the product and the challenges. Now, the other big challenge is this. They try to treat it like as if it's Amazon. They try to say like, oh, it's the Amazon of Africa. Guys, do you understand the challenges we face in the African market before you can be able to start launching logistics like how Amazon and eBay and Alibaba do it? Because there's a lot of different challenges in the local market. For example, a lot of people do not actually have addresses. When it comes to e-commerce, addresses are pretty important. And there's a lot of different infrastructural difficulties that have been happening in the Nigerian market. And that's where they originally kind of launched from. And in the Nigerian market, they were having 40% of product failed delivery. 40%. 40%. 40% of, sorry to yell here, that's a huge number for product failure of delivery. Imagine if Amazon came out and said like, yeah, last year we delivered to millions of Americans and millions of Europeans and 40% of them did not get their product and they canceled the order. That is a big indicator that this company was not ready to scale to other countries. Why are they scaling to Kenya? Why are they scaling to other African countries if they've not yet perfected their system in Nigeria? So when I'm comparing to Amazon, Amazon started off by selling what? Books. Books. Not everything. Books, okay? They perfected how to sell books, they learned how the shipping routes worked, and all those different things until they started expanding to toys. Did I say they started selling couches? No. Did I say they started selling other different products? No. They went to toys and they went to other niche markets where they can be able to perfect and understand the system. But Jumia was like, nope, hold my beer. I'm going to do what Amazon was able to surpass, and I'm going to do it in a shorter period than they did, and I'm going to do it at less capital, okay? So that was the biggest indicator of why I decided to short the whole Jumia stock. Now, the next big indicator was number 2, which is how much money they have burnt in the African market. The reason why Jumia went public was not because they were like, hey guys, this is a huge opportunity for everyone else to come and enter Jumia right now because we're going to be able to grow your money. It's a good time for you to invest in us. No, Jumia went public because no investor or institutional investors or their original investors wanted to put money into the company. For Jumia to go public at such an early stage in the e-commerce world in Africa, it basically meant that they had no more money to burn. Jumia had already burned close to over $1 billion. That is $1 billion in the African market. If you're an African entrepreneur and you heard somebody burnt $1 billion, you're gonna be like, ridiculous. Right? And this is not Europe, the European market. This is not the US market where investors are going to be like, nah, don't worry about it, bro. You can burn $1 billion a year. Like, for example, what is it called? Uber burnt $5 billion in their last quarter or something like that. And investors are still like, yeah, we're still with you, bro. Don't worry about it. But in Africa, they're like, nah, bro. No, that's not going to slide. And they're still losing money right now. They haven't gotten to the point of profit. So the reason why they went public was because they needed money to be able to burn, to be able to survive. If they didn't go to the stock IPO, then what happened to Conga, right? Conga ended up selling to a Chinese company and they sold at a loss. Okay, that's not a good thing. It's not a good thing for quote unquote an eBay compared to Amazon, because they're basically, Jumia was the Amazon and Conga was basically like eBay. Those guys are going off at each other. Imagine if eBay got sold off in the early days. Like, it does not make sense. So that's one of the indicators you have to look at. What was going on? Why did they want to go public? It's because they desperately needed that money. And when someone desperately needs that money, when they're coming to you to invest in them, that is a huge warning. When you're coming to get money from investors, you're gonna come with confidence and be like, hey, look, if you guys don't want to give us money, that's perfectly fine. We're still gonna survive, okay? It's the same thing. You look at, for example, Elon Musk. When investors say no, when they didn't want to give him money, what did he do? Did he go district like, please, I'll give you more shares? No, he was like, Give me that money. Give me $100 million from my own account. I'm putting it in this company. I don't need your money. And guess what? They went public and they're doing very good right now. They have challenges here and there, but guess what? They have more control and they're more stable. They still have challenges. They're still in a very high risk market as far as where they are in, but they're still kicking butt and taking names. But Jumia went public because they desperately needed that money. And also, it's kind of a huge shocker that original investors didn't want to pour more money into it. They're looking for a way to kind of almost cash out because things are not going too hot or well. Now, this brings us to the other third point, why I decided to short the Jumia stock. Now, there's other different things. Of course, the other reason why the short happened in the stock is because there are a lot of different fraudulent claims that came out saying that they did not publicly give their information very well to investors as far as some failure rates of some data and different things like that. Here, I don't want to enter that whole political part. I'm talking about from my own personal perspective as an investor. And the third part, the reason why they want to invest in Jumia is because how in the world are you guys going to do e-commerce when we haven't figured out the most basic stuff when it comes to own, different things in the market in Africa? It goes back to the whole thing of the 40% failure rate. Like, if we don't have addresses, if we don't have the right shipping routes, like delivery systems, like there's a lot of different moving parts that are happening when it comes to delivery. So that whole challenge of delivering was my biggest obstacle. I was like, how are you guys gonna figure out the whole delivery part? Because what's gonna happen is people do not want to pay online. Africa is still very much cash at hand. I give you cash, you give me the product. And for e-commerce, that is not a good thing, because a person can say, yeah, I'll pay when you deliver, and the person might change their mind and be like, I actually don't want that product, because a lot of different products people buy online are impulsive. When you buy something impulsive and you don't have to pay cash at that moment, and later on you have to spend like a month, since delivery takes a while, or 2 weeks or 3 weeks, whatever it might be, or a week, you're gonna end up being like, actually, I don't want that anymore. That's a huge challenge, it's a huge obstacle. And the other thing is, very much right now, it's only a small percent of people who are actually purchasing things online. So that's another huge barrier. Because of course, when you look at Amazon back in the day, also people were not buying things online as much as well. People were still very much going to the physical stores. But what ended up happening was, because there was such a huge market that's willing to spend money, that's how they were able to do that. And a lot of different things are going to be challenging for Jumia. I'm not here saying this is doom and like they're doomed, they're done for, Jumia is done for, they're not going to survive. I'm not saying that. I'm just saying when the company went public, I was like, they're not ready to go public. This stock is not ready to keep increasing in price. I'm definitely about to short it. That's why I decided to short Jumia. That's the only reason why. I'm not here saying having Europeans or Americans investing in the African market is a bad thing. I'm just saying, please, let's just label it for what it is. It is a German operated and owned company and entity, as in we have to put those things out there, because when other investors are going to be looking at this stock and be like, oh my goodness, look at that African company that went IPO, went all the way to 46 a share, and then dropped all the way to $7 a share. Well, I want to invest in another African company, even though some of that blame is going back to the whole European market, or the German operators, or the French operators. And once again here, I'm not trying to blame anybody. I'm just stating my personal opinion. What Jumia has been able to do is incredible. They've been able to take risks in the African market. I love it. I give a shout out to them for that. But the one thing I do have to say is the way they approached it. And I'm not trying to say I'm an expert. Okay, I'm not an expert. I'm not an expert in e-commerce. I'm just looking at human history, how Alibaba went to market, how Amazon went to market, how eBay did their thing. And I'm just looking for what those guys did. I'm looking at what's happening in the African market. And I made a video previously. We cannot copy and paste ideas from European market or from the other market and expect it's going to do the same thing in the African market. It's just not going to work the same way, okay? Anyway, guys, I don't want to talk too much on this video. It's already kind of about to be 11 minutes on this video, and I've been able to pass my point through. I was able to take profit on my short on Jumia, and I'm kind of just sitting around right now and seeing what's going to happen next. And then if the Jumia stock drops down to like $3 a share, it's going to be hard for them to get back up again. And once again, like if any kind of recession happens in the US market, it's going to hit Jumia very hard, right? Because if you launch or go IPO on a company on a point where the market is already pretty overpriced, like for example, the S&P 500, the index 500 for the US or the top 500 companies, they're already priced pretty high. As in we had, Amazon and, Apple going to $1 trillion valuation. That tells you the market is definitely very much overvalued, or it's very much at a peak. And if you enter the market at a very high note of going IPO, it's very hard for you to be able to stabilize, especially when you really need that money. If you're a company that has cash, like for example, definitely Amazon, Apple, Microsoft did survive the dot-com bubble, they did survive the 2008 market crash. That's because they were making profits. That's because they were able to bring money in. And also Amazon was still not making profits, but they had investors who were willing to stick with them for the long term because they're able to see the growth in certain metrics. It's very much different, but I'm just here trying to say, hey, Jumia, keep doing what you're doing. Just make sure that, just take it slow. It's Africa, bro. Like this ain't Europe, this ain't Chinese market. Like shipping, delivery, we got challenges there, as in some people don't want to pay online, cash, I don't want to say like an advisor, but I'm just saying, man, you got to take it slow in the African market. You have to remember Jack Ma or Alibaba. We didn't hear about Alibaba or Jack Ma for a very long time until the company went public. And they had to deal with a lot of different things. And Jack Ma talks about it in his book. They had to deal with a lot of different things about delivery and shipping and all those different things. They had to figure those things out before they really started scaling things into other parts. Like, for example, Alibaba very much stayed in the Chinese market for a while. And Jumia was like, we're going to go to all the countries in Africa. We're going to go to Kenya. We're going to leave Nigeria. We're going to go to like 5 other countries in Africa. Like, come on, man. Like, I get it. Africa is a continent. We're very much like connected and very close to each other. But every country is different. Kenya logistics are going to be different than Nigeria. And I'm pretty sure they've now been able to see that. And it's very difficult to be able to just think you're going to be able to copy and paste the same thing from a Nigerian market to the Kenyan market. It's going to have different logistics. There's going to be different challenges in the South African market and etc. That's why Amazon is very much focused on the US market, or even Apple to this day. They're very much focused on the US market way more than the European market or even India or other parts of the world, because it takes a while for you to understand an industry, the culture and other different things like that, okay? Thanks very much for watching this video. This is Money 101 episode. This is the first time I've ever actually dived in deep on a trade that I've done in the stock market. But anyway, thanks for watching. Peace to the out.